In 1980, silver hit $50 an ounce. If you adjust that for inflation, we're talking nearly $180 in today's money. Right now, silver is sitting around 30. So, what happened? Did silver suddenly become worthless? Did someone discover a giant mountain of it? Did everyone just wake up one day and decide they didn't want it anymore? Nah, none of that. The price got crushed on purpose, but the trap that's been holding it for decades is about to snap shut. We just hit what I call the death cross of the American empire. It happened quietly in late 2024. For the first time since the fall of Rome, the U.S. government is spending more on interest payments for its debt than it spends on its entire national defense. Think about that. We are paying more to the banks for the privilege of being in debt than we are to protect the country. We are sitting on $37 trillion in debt. Not billion, trillion. That number is now mathematically impossible to repay through taxes or growth. It's a terminal phase for the currency. The system isn't just crashing, it's being redenominated. And if you're still holding your life savings in a traditional bank account, you're the one who's going to pay for the reset. You see, silver has been money for over 5,000 years. Before gold was the hot thing, silver was king. It was the people's money. Gold was for kings, silver was for the rest of us. But in 1873, the big banking guys pulled a fast one. They kicked silver out of the system because it was too accessible to regular folks. They wanted to monopolize the money supply. It's the same exact pattern every time. Every time silver starts to show the true weakness of the dollar, the money guys change the rules. Look at 1980. This is the legendary story of the Hunt brothers. These guys were billionaires who realized the dollar was getting weaker, so they bought a third of all the silver in the world. They weren't just buying paper. They were taking delivery of physical bars. The price went from $6 to $50 in a year. It was total chaos. So what did the system do? They didn't find more silver. They changed the rules. The exchange said you couldn't buy anymore. You could only sell. In what universe is that a free market? It was a hit job. The price collapsed from 50 to 10 in 2 months. They sent a message. Don't mess with our paper game. Now you might think the government will just bail out the banks like they did in 2008. But here is where it gets sketchy. The rules changed while you were sleeping. Post-2008 laws shifted the protocol from bailouts using taxpayer money to bail-ins using your money. This isn't a theory. It's the current legal standing. Once you put your money in a bank, you aren't an owner anymore. You are an unsecured creditor. The bank owes you that money, but if they fail, the law says they can recapitalize themselves by seizing or freezing your deposits. There is a major stress event coming in 2026 where this framework could go live. They've already written the playbook. Are you seeing the pattern yet? They devalue the currency, then they change the rules to make sure you're the one holding the bag. While the banks are preparing to trap your cash, the smart money is already exiting paper assets and moving into physical ones. Look at the Shanghai Gap. Right now, silver is trading for significantly more in the East than in the West. The paper price on the COMEX is a fiction, and the vaults are bleeding. The Silver Institute says we've been in a supply deficit for years. We are using more than we mine. And here is the wicked part. 72% of silver comes as a byproduct of mining other metals like copper and zinc. Miners can't just decide to produce more silver because the price goes up. They're stuck with whatever geology gives them. This brings us to the Samsung signal. Industrial giants, the guys who actually need the metal to build solar panels, EVs, and AI data centers, are panicking. They are bypassing the exchanges and going straight to the mines to secure direct supply. They are draining the vaults before the general public even knows there's a problem. The U.S. has sold off its strategic mineral stockpiles and outsourced the refining to nations that aren't exactly our friends. We are now dependent on geopolitical rivals for the materials we need for national security. When the real shortage hits in 2026, the government won't ask to buy your silver. They'll invoke the Defense Production Act. This means the government eats first. They will seize production of essential minerals like silver and lithium for national security, leaving private investors with nothing but paper promises. Physical beats paper, every single time. So how do they fix a $37 trillion problem? They use the gold revaluation mechanism. The Treasury holds hidden equity in the form of gold certificates from the 1930s, valued at a fake book price of $42 an ounce. If they revalue that gold to a market price of, say, $20,000, they could wipe the debt off the balance sheet overnight. It's an accounting maneuver that resets the system while devaluing your dollar by 90%. It's the same exact pattern every time. They trap you in the paper system, then they reset the value of the paper. History doesn't repeat, but it rhymes, and right now the rhyme is getting really loud. $50 silver is the easy call. It's just a return to previous highs. But if the paper market cracks and industrial buyers start scrambling, $300 isn't crazy, it's inevitable. The death cross has already happened. The bail-in laws are already on the books. The Samsung signal is flashing. The system isn't going to warn you. It's going to lock the doors. Are you going to sit there and wait for the digital middle finger? Or are you going to move into something real while you still can? Get out of the paper. Get into the physical. The only question is whether you're going to act before the rest of the world wakes up.